Hi everyone, we've analyzed the three ETFs before: UVX, SOXS, and SQQQ. All of them went up yesterday. At one point, there was some doubt. Let's take a look one by one. UVIX rose 10% yesterday. If you followed the plan, you likely made a profit. Should be in profit. So far, UVIX looks like the best pick, because it has the most upside potential. Even I used to prefer SOXS more. Now I may need to change that view. I suggest holding 30% each in UVIX and SOXS. Maximum 30% per ETF. Start adjusting positions gradually. As for SQQQ, keep holding it steadily. Now let's look at SOXS. Especially SOXS yesterday, it dropped at the open, which made many investors doubt it. But I said it would bounce back. Sure enough, it rallied into the close. I believe it's not just a one-day move. I believe it's part of a bigger pattern. Specifically, this is what we call a weekly rounded bottom formation. Let me repeat. Weekly rounded bottoms are rare. SOXS has a weekly rounded bottom. UVIX does too. Look at the UVIX setup, also forming a weekly rounded bottom. Now let's look at SQQQ. It's also forming a weekly rounded bottom, same rounded base pattern. So next, as the Nasdaq starts to decline, this is a key point I want to make. In the coming weekly downtrend for Nasdaq, during this weekly level correction, these ETFs could potentially double. They might deliver 100% gains. UVIX could reach $60. UVIX hitting $60 is realistic. SOXS could climb to $20. Its price target, $20, is achievable. Then for SQQQ, price target is $40. It could hit $40. Why? Why is that? Why? Because all three are inverse index ETFs. They go up when the market goes down. So why again? Are we bearish on the index here? Yes, no doubt we are. We are clearly bearish on this level. Let's go deeper. Analyze the three major indices. Look at the Dow Jones Index. It dropped 0.7% yesterday, but at this level, take a closer look. It's losing momentum on the quarterly chart. Monthly chart is turning down. Weekly chart is also turning down. Weekly trend is clearly down. And on the daily chart, it's showing a bearish two black crows around one white candle. Yes, daily time frame. It's already showing a 2 down, 1 up pattern. It's heading lower. So let's also take a look at the Nasdaq. Same with the Nasdaq. Yesterday's movement, here's the situation. Daily chart is showing a 2 down, 1 up as well. Next step, it may trade sideways but likely drop further. Weekly chart is already pointing downward. Monthly chart is wide range and choppy at best. It may drop to 17,000. Quarterly chart shows no more room to rise. It's out of steam on the quarterly chart. Now look at the 60-minute Nasdaq chart. 60-minute level is stalling. It paused here, then dropped another leg down, and it could very well drop one more leg lower. On the 15-minute ultra-short chart, it's uncertain whether it can hold here. And the 5-minute chart, frankly, not much trading value here. So we'll skip that for now. Now let's look at the S&P. The S&P 500, the S&P 500 index, 6,000 point course. Yesterday it showed up again. The same pattern again, 2 red candles around 1 green. So right now the trend isn't looking great either. Overall, it's moving lower. It's been flat for 5 straight weeks on the weekly chart. Sideways movement this long usually leads to a drop. Monthly chart not worth looking at, just wide swings. Quarterly chart shows no upward momentum either. I've said many times S&P 500 has what? A so-called 6,000 point curse, also known as a 6,000 point barrier. What does that mean? It means every time the S&P 500 rebounds to just above or near 6,000, it almost always pulls back. Almost always falls from there. This zone, it nearly always drops. So there's really nothing to debate. Just go short, no hesitation. At this level, just short it directly. Next, let's talk about what we mentioned yesterday. First, the bearish view on the PLTR was spot on. We got it right at this level, and this shows my bearish view was correct. The drop here is likely to continue. Same story, daily chart is bearish, weekly chart shows a downtrend, and the monthly chart, same, still bearish. Now let's take a look at Tesla. Tesla's chart. Monthly is bearish, weekly is bearish, daily chart yesterday it dropped 4% on the stock. But Tesla's options, most of them doubled. Still, I don't recommend trading options because right now we don't have enough profit buffer yet. Let's wait until we've built up gains, then we will consider it. Maybe take everyone through it then. So at this point, best to stay on the sidelines. At least until the end of June, our main focus remains on those 3 ETFs, UVIX, SOXS, and SQQQ. Now, how do we trade these 3 ETFs? Let's go into some detail. At the current level, use a 15-minute chart to swing trade. If today opens lower, just hold. If it opens lower, we keep holding. If there's a rally intraday, as long as it turns green, we take profits, sell near that area. Let me be specific. Around 28.8 to 29, trim your UVIX there. That's UVIX. Back to our main plan. 28.6 to 29. Since everyone might be watching this video at different times, take profits in that range. Sell high in that zone. Take profits on the rally, then wait for pullback to this level. Wait for it to pull back again to somewhere near 27.2. Give or take 30 cents, around 27.2 plus or minus 0.3, a 30-cent range. Within $0.3 up or down, then and what do we do here? Buy. This is your entry. Buy low here, that's for UVIX. So for UVIX, this is a setup. Now let's look at the SOXS. What's the setup with SOXS? Still trading around this level. At this point, we should trim a bit. It's a good spot to take a little profit. Yeah, this level around 9.5 is where we trim. Take profits here. SOXS around 9.5. Take profits, sell. And when should we buy the dip? Look for entry near 9.2. Buy back around 9.2. That's your re-entry point. As for SQQQ, I usually don't trade it, but some of you do. So let's take a quick look. It's more or less the same setup, same as ours. At the current price, you can sell now at market right around 22.4. Okay, so sell around 22.4. When to buy again? Watch for a pullback to 22, near 22, with a range of about $0.2. Roughly a 20-cent swing. That's a buy zone. All right, good. That's it for today. One last point. You can use 30% of your capital for ETFs, up to 30% for ETFs, no more than that. For individual stocks, keep it under 20%. That's straight from a standard finance textbook. Any college-level finance course would say so. Individual stocks, 20% max. That's a basic risk control principle. As for options, absolutely no more than 10% exposure. That's a rough 1 to 2 to 3 ratio. That's all for today. If you like this content, please subscribe and hit the like button. Thanks.